What's up? What's up, everybody? Good morning, good afternoon, and good evening, and wherever you are in the world. Thank you for being here. And this is the state of the markets according to me. And you know, a lot to cover, and because usually I do calls almost every day, this is going to be the only call until next week. So I just wanted to get it all done. And I thought this was opportunity to uh, a great opportunity to share with everybody kind of what I'm thinking and what I see. And I think there's a lot of issues out there, but I think we sometimes get confused. And I want to give kind of a big general call and kind of go over some things. And obviously, I'll take any questions that you have, as I always do. See, I told you, London. There you go. So, anyways, so this is the state of the markets according to me, and I think there's obviously some issues, but the markets and economy, according to your friend here, that obviously you guys know I have an opinion. I'm not afraid to share that opinion because you've ever seen me on TV. Okay. But again, I am also a technician that understands that some of the stuff doesn't mean anything. And I want you to understand that as well, because this is a big time for everybody moving forward, because you're going to start to see a lot of these prepare for the economic collapse. Economic collapse preparation. Now, we all know, or I hope you know, that the markets are going to correct at some point in time. I don't know when it's going to be. I wish I knew, obviously. We could all sit on the beach together and, I could play a whale. But at the end of the day, nobody knows when this is going to collapse. There's too many factors out there, and there's too many reasons to believe that it won't right away. And if you play for it, you are just kidding yourself, and you're making a huge mistake, and you're going to cost yourself money. The only way to play for an economic collapse is to be hedged in your long-term portfolio so you can benefit from it and not get destroyed. And then, try to find market footprints that will help you, that will guide you there. You cannot be in a position to do that. So you're going to see, you'll see, I mean, we've seen them all along, but you're going to start seeing more of the markets that coming to an end, Harry Dent and this guy and that guy, and everybody's going to tell you why the world's going to end. And everybody's going to tell you why gold's going to 10,000 and why the dollar is going to collapse again. And of course, don't forget, in 2009, the world was coming in, the dollar was going to collapse, and it became the strongest because obviously it is the strongest. We're still the biggest economy. The United States is as bad as things could be, or as bad as I'll make them sound later. We still are the strongest, the best, and there's no place like it. So there's just other issues, but there are things to understand. And, you go back in history, and of course, there's been many great bubbles, but everybody's heard of tulip mania. How did it end? It ended just like this. Okay. South Sea bubble. And this is the one that's talked about the least, but it is actually one of my favorites because Sir Isaac Newton went broke in the South Sea bubble. Okay. Number one. But number two, the final debt payment was just made a year or two ago. So we're 400 years later, they finally made the final debt payment from that bubble. And of course, the Dow, we saw it. You've seen history, obviously. And if you were around in 87, and if you're around in 2000s, you've seen a number of things happen. So the question is, will the stock market crash in 2017? And I go, hell if I know. Again, I don't ever, one thing about me, I'm never going to peddle fear. All right. I'm never going to get crazy. I'm not going to tell you to fire in that we're going down, the world's coming in. That's just not, first of all, that wouldn't be correct. Second of all, it's not logical. And third of all, it'd be ignorant of me to try to convince everybody that we're doing this. It's not right. The markets are going to do what the markets will do. Because remember one thing, the markets are always right. They never get sick. They never get tired. They just trade. Now, obviously, who drives the markets? Well, humans drive the markets. Money drives the markets, and the emotions of humans drive markets. So when are the emotions going to change? Does anybody know? I don't know. I mean, again, I don't want anybody to think anything I say today. I don't want you to think that I'm predicting the end of the world, because I don't believe that's the case anyways. I do believe that the stock market, I believe if you went to sleep for 20 years, you and Rip Van Winkle, all right, and you had your portfolio, you left it, it would be higher when you came back as long as you had solid holdings in there. So again, I don't ever want to think that there's fear or anything about it. It's just simply what I see. Complacency will be the architecture of your downfall. And that is the key. All right. That's eventually, we all know when everybody gets on one side of the boat, okay, when everybody does the same thing, when we are in the herd mentality, eventually the herd gets slaughtered. And this is where you need to take your skills and learn from them and use the tools that we use when we're together so that you can defend yourself against these. So, what's driving the record rises and will they continue? Well, we know the first thing that's driving the market is what? Is not free money, but cheap money. All right. Again, we've had currency manipulated for 104 years now. It's never been worse than it is today. All right. But in the meantime, you continue to have the Feds and central banks, not just the Fed, but central banks around the globe, continue to have the willingness to pump in more cash. Now, more cash means what? It means that they're devaluing the money that you hold. That's the simple bottom line. All right. If you have a dollar bill in your pocket, well, first of all, it says note now instead of silver certificate, which it's supposed to say, because it's really supposed to have value, which it has no value. It actually is an IOU. But if we have these situations, the dollar that I own in my pocket is worth less today than it was yesterday. And it will continue to get worth less as long as we continue to have interference and manipulation, trying to make sure that we prop up an economy or a stock market. So that's one of the drivers. And, you look at some of the major companies, they talk about record earnings right now. All right. Well, the earnings are good on what? They aren't good on growth because we have no GDP. All right. They're not good on anything with the exception of they can borrow money at a lower rate than they can return it. So if I said to you, I'll loan you money at 3% because you know that you can make 10% on every dollar you're holding on to. How much are you going to borrow? You're going to borrow as much as you can. What will that do to your earnings? Well, it make your earnings a lot better. All right. You tie into that low interest rates. All right. That makes that even farther debalances the balance sheet and makes it even a bigger farce than what we're seeing. But again, it doesn't matter. It is what it is. All right. Now, one of the things we have going is the chase for yield, which is creating more of this complacency. When you take and put everybody basically on the same side of the market, all right, which is what we're doing, when you force the elderly who would much rather be sitting in bonds or in the bank, in CDs at 5%, and you force everybody into one investment class, which is basically what we've done, because as nice and as good as I like gold and silver, those don't return anything unless you sell them. All right. Elderly, retirees, fixed income people need money to come in. And of course, it's not coming in because they can't get anywhere else. So what happens is the money they worked all their life to save for, they can't save enough. They can't spend enough now because it's not replenishing. It's disappearing. So as it disappears, they are forced to try to find other classes to invest in. Where's the only class you can go right now? You hear it on TV every day. Well, the stock market pays a better yield than the 10-year note. But what they fail to tell you is that the 10-year note, if you put 100,000 in a 10-year note at 2% today, you'll get 100,000 back in 10 years plus 2%. Right? If you put 100,000 in the market today, you might not get that back in 10 years. It might be worth 10,000 in 10 years. Now, again, I would think that would be unlikely, but the rate over time is not necessarily better for somebody who's on fixed income. The rate of return from the stock market for an investor and for somebody who's growing to get to that point, there's none better. All right. There's nothing better than investing your money if you can take the drawdowns and the swings that go with that, or you hedge yourself. But whatever you do, there's nothing better there's no bigger return than the equity markets over time. However, if you're 70, you don't have as much time to make that money work. And if you've only saved X amount of dollars, then if you live longer, you're going to run out, which is obviously a fear for everybody, which makes everybody chase into the market. So as we look at the complacency, here's the S&P versus the VIX. Right? The VIX is almost at all-time lows again. S&P, very close to all-time highs. I mean, certainly we're what 1% or so, 1.5%. Here's the Dow versus the VIX. Again, perking up, and we see this at all-time highs. And of course, the Nasdaq versus the VIX, which continues to spike. Now, again, the Nasdaq has started to show a lot of weakness. All right, and at the end of the day, we all know what the final result's going to be. But again, at any day, you can't understand or know what's going to happen today. All right, you need to have some guidance and some things to watch for. But these are very frightening signs from an overall economy standpoint, because too much complacency, as they say, complacency breeds contempt. And now the stock market and the economy are completely different. And if you haven't noticed that, or if you don't understand that, just think about it. All right, the benefactors of all this bailing out was who? The rich, the banks. Okay, the average Joe the plumber that was supposed to trickle it down and open up the drain down to the middle class, I guess he didn't have enough Drano with him because they didn't get it open. The promises that we had when our last president was elected was that we were going to trickle this money down to everybody, and it didn't seem to make it. It all seemed to get stuck with guys like Buffett and those guys, because they were the ones that weren't presented to position to take advantage of it. Now, again, listen, that's one of the benefits of being rich. There's always a great story behind wealth, and there's you've heard the story, the rich get richer, and that's because just for these types of reasons, because they have to set things up. So when they bailed out the banks and they took all that, that was basically the end. Over time, we haven't seen any true growth. So that's a problem. All right. Now, our economy, all right, borrow money, buy stuff, you never have to pay it back. Now, typically in any economy, the number one driver of an economy is middle class people, because they're the buyers, they're the spenders, and they need money to keep going, but they will spend almost everything that they get. I mean, they'll put their money away, if they're smart, but basically they continue to create the velocity of money. The rich never change. It doesn't matter. They're going to spend what they're going to spend anyway. They have no desire. Nothing bothers them if they're truly rich. So we've got no jobs. Now, I keep hearing the jobs are great. Well, I bring up just one minor little fact that somebody might want to talk about. If we're at full employment and the jobs are so good, why are we getting less tax receipts? I mean, I don't know. It doesn't take an economist to figure that out. I mean, people aren't making as much money, so they're not paying as much taxes. Pretty simple. I mean, now nobody talks about that. They talk about healthcare, which is a disaster, but because the entire swamp of Washington is a disaster, and I don't care what side you sit on. I mean, left, right, it doesn't matter. Both sides are crooks. They have no interest in you and me, the average American person, because they could care less. They only care about themselves and their own independent pension that doesn't have anything to do with Social Security, their own healthcare system that doesn't have to do with Obamacare, their own salaries, everything they do, it's about them. It's not about you and me. So every time you hear this nonsense like the debt ceiling coming up at the end of the summer, is there anybody here who believes they will not raise the debt ceiling again? Okay. And I know nobody believes that, so I'm going to go on. But they do that because then they come out and say, oh, we took care of it for you. We raised the debt ceiling. Well, how did they raise the debt ceiling? Well, they taxed us more money. They figured out a way to get more. We're paying for it. All right. We've got no growth. Where's the growth at? We were promised, I remember Steve Moore, 4% growth. Well, we had 1.7. Now, I don't blame Trump for any of this right now, but what I'm saying is that you cannot get growth under the current market environment that you're putting out there. The current economy will not provide growth because we're not bringing back jobs. People need to have jobs that make more than, $9, $10, or $11 an hour, $12 an hour, $20 an hour, especially if they have to pay for their health care, which has been a big crisis. The currency manipulation is brutal. Okay. Now again, it's a bad thing because what it really does is it artificially props up many things. And eventually that Ponzi scheme, which is really what that is. Okay. It's a legalized Ponzi scheme. Eventually it has to run out. And of course, then there's the Federal Reserve. Now, again, I'm a big anti-Fed guy. I never was that much of an anti-Fed guy, but every day I get more because I watch what they say. And why? Because here's why. All right. First, let me say I don't believe we'll see another financial crisis in our lifetime. It's magic, right? Now, are you kidding me? This Fed chair, okay, the third in the line of great bubble builders, says that there's not going to be another crisis in our lifetime. I go, okay, I laugh. I go, okay, but then Neil Kashkari says there's a 67% chance that we'll have another financial crisis. Okay, now here's two people of the same Fed, of the same, in the same organization. It's not like one was 10 years ago and one was now. They're right together. Okay? Now they're sitting at the same meetings. They're watching the same thing. So one says one and one says the other. What does that mean? Okay. But the biggest one of all time, this is one I always use, is John Maynard Keynes. That's our whole economic system is based on this guy. We will not have any more crashes in our time. In 1927, he said that. Okay. And then he says there's no harm in being wrong. I mean, why would anybody make such a ridiculous statement like they can tell the future? That is the problem. That in lies the bigger problem with the Federal Reserve, okay? Because they are economists. They have no idea what real life is about. They are well-educated, well-paid government employees, even though the Fed is not part of the government. But believe me, it is in its own cockeyed way. It is truly a private corporation. But if you look at their email addresses, they end in .org or .gov. So you tell me. Anyways, if they none of them could, in my opinion, if you put them in a field in the middle of nowhere, they couldn't find their way out. They wouldn't know the sun rises in the east. And that's the problem you have when you have theorists running an economy, because they don't understand the real workings of what the average entrepreneur has to go through. Most entrepreneurs start out, they work for themselves, and they're always, working 70, 80 hours a week, and they add somebody when they need it, and they keep growing, and they have to do everything, all right? From cleaning the toilets to selling the product, all right? So it's a thing that I find that extremely frustrating from my side. And of course, their funky way of business is done a lot of damage. You look at, everybody's talking about Illinois, which is is obviously, Illinois is probably the worst run state in history. All right. We've had, I think, the most criminals here. We've had 4 or 5 governors go to jail. We got John F. Kennedy elected in 60, okay, because of the mob, all right, in Daley. So, there's always been something going on here, but when you watch immunity start to go higher, that's a sign. That's a sign of problems, and that's happening in Connecticut, and of course, Illinois is broke. They're not broke from taking my taxes, but they're broke. Now, everybody says how great housing is. Now, again, I'm sure some of you on here are doing very well in where your neighbors are in housing, but I think housing's in another bubble. Now, if you look around the globe, Canada, Sweden, Australia, you couldn't afford to buy a house there. San Francisco, I said something a couple weeks ago on my Monday call. I said that even the Google employees are complaining about the price of housing in San Francisco. Of course, Nancy Pelosi's there. I'm sure she'll help and give some of her $100 million away and help people stay there. But in New York. But if you live other than those places and a few others around the United States, I don't know how your housing is doing. I don't see any great growth because I don't see people getting mortgages. There still is not the accessibility to cash. All right. Just sold my house. That market is way overpriced. London is crazy. Let's start our own bank. I'd like to start my own bank. Believe me. Why do you think everyone wanted to get in the banking business? And I heard Alan Greenspan, actually last night, was on Wall Street Week. Alan Greenspan said that, banks can lend out. Mr. Banker, I know you're here. Is that 9-1? Is that the number? Am I correct at that number, 9-1? Okay. Greenspan says they should be able to lend out at 30-1. Last night he said that, and I go, what? Are you nuts? Realize that they're supposed to have, like, if they're going to lend out $9, they're supposed to have $1 in their pocket, okay, as they call reserve. That can't be used for anything else, and it's meant as a reserve. So now Greenspan wants to lend out 30-1. Didn't Lehman Brothers and Bear Stearns just go broke because of using that number of leverage? I think he is. So my point is very simple, that the economy in housing although it could be better in some places. And Boston's very hot, I just heard, and New York, as I know, is hot. And listen, there's a lot of places that are hot. But I know one thing factual. I live in a beautiful house, a big ranch on a couple acres in a very nice suburb in Chicago, in Illinois. And I bought my house at, I would say, the absolute bottom of the market. I put a lot of money into it, and I could not get out the money I put back into it today. All right. Now, again, I'm not complaining about that. I'm just saying that to me, that's just a sign that we're not seeing any real growth. I mean, I got too many good things around her. And of course, if you look at here, typical end user shelter buyer with 10% down payment. Okay. Here, if you live in Los Angeles, your income's down 55% compared to what you need. Okay. Just look at these numbers. Again, can we continue to amass debt? And my answer is, well, I suppose we could. I mean, look, we've done it for so long, and I'm going to get free college. Yeah, and I'm going to get the bill. All right, so I just finished. I had 2 in. I just finished one. We had a big party, and we're in the next one next year. I got 1 more to go, but I don't know how anybody does it. Okay, $100,000 a year of dollars after tax. You don't get to deduct it, so that's another nice feature. All right. That you have to pay for if you don't want your kids to be in so much debt going in when they start the real world. Now, debt is a very, very bad thing for everybody. Okay, but we don't care. The United States just keeps everybody. I shouldn't just say the United States. We're not guilty alone here. All right, here, if you were born today, okay, your share of the debt would be $42,000. Okay, projected. Okay, it would be $163,000. So just think about those numbers for a minute. Right? Again, does it mean the market's going down? No, it doesn't mean anything. It's just part of what's going on that gives you signs that you should think about. Okay, debt to GDP. Now, historically, we've had debt to GDP very low. Now, obviously, during wars, that goes up higher because you need to finance. But of course, typically wars bring in prosperity because of all the jobs and things that it creates. Again, it goes back to the money wheel, right? The velocity of money, get it going and turn it over. Well, now we're at 140. I think right today, as of today, I think we're at 104% of GDP. Now, what I want to ask you all is, how come they don't have to work on some sort of a budget and we do? Is anybody here get money printed for them where they can go ahead and ignore the bills and continue to spend and not worry about it? This is a problem. Now, I thought that was a fundamental thing of business, which you can call the government whenever you want. It still is a business, all right? It has money. It's got payables. It's got receivables, and it does all kinds of stuff. But you would have to assume that they should have to live by some sort of a budget, but they don't. And this debt to GDP is going higher. And you keep hearing these guys talking about how they're going to get growth. There's only one true way to get growth. You need to make money available to small businesses, and you need to get manufacturing and those types of jobs back until all of our citizens catch up to the technology world, which is where a lot of the jobs are that can't be gotten right now because there's not enough people to fill those jobs. The problem with the tech revolution versus the industrial revolution is tech is much more of a challenge. If you're talking about working on a machine or working on a line in the industrial revolution, it's a lot easier to take somebody and teach them how to do that. It's not so easy to take somebody and teach them how to write code and do the things that are in demand today. So it's a different world, which, again, my personal opinion is they really screwed up at handling the $4 trillion that just went into the market from the Federal Reserve was a big screw up, because I think they could have made better use of the money. And actually, that would have been, in my opinion, the answer to rebuild America, put all those people back to work, let them spend. That would have created your growth, and I believe we'd be out of these troubles by now. But again, the inflation deal is really a thorn in my what, because when you talk about inflation, why do we need inflation? Why is inflation good and deflation bad? Okay, if you're working under a true free market system, it shouldn't matter. But what happens is because the government, well, actually, I apologize, the Fed prints so much money for the government. All right, they have to figure out ways to increase inflation so that they can collect more taxes to pay out for the money they printed. Again, legalized Ponzi scheme. It's a big circle. That's why you can make more money, but you might not feel like you're living better than you lived before, because they're artificially propping up your asset prices so that you can pay more taxes, for example, on your house. All right, for example, on a lot of things that you pay tax on. So it becomes another problem. Natural inflation driven by true price discovery is fine. If demand is good, then prices should go higher, shouldn't they? I had no problem. But my house should not be inflated up because the Fed needs to raise money for the government so they can raise my taxes so they can pay back the money they reprinted. It's not, to me, a big sign of logic. And of course, that's why the dollar has gotten destroyed versus the debt. Okay? I mean, it's pretty simple. Again, I'm not an economist, but I can understand the value of a dollar, and I can understand what my buying power comes down to. Okay? And this is the problem that has been building and mounting over time, and this is where the solutions have to come in. Now, misconception of the Fed: free money for everybody, right? Banks are gangsters. Now, again, this is another thing that really got to me. Okay, is the overall bailout of the banks. I didn't like it in the first place, but again, I've been told by many that I was wrong. And I'm not going to debate the issue, but my problem is that how do you bail out the people that took you down? How do you bail out the people and let them get richer than they were before it happened? And they always know that the Fed's going to be there to bail them out. I don't understand that from a logic standpoint. You heard me talk. Again, I'm not the smartest guy in the world. But I do, in my own mind, understand logic and common sense. That didn't make a lot of sense. So I guess I can go out and borrow and lend all the money I got, and if I go broke, I can just go in my basement and print some more money. It doesn't make a lot of sense to me. I think this is all misused. I think the Fed is way off course of what their intentions were. Of course, their actual intentions were, depending on if you believe the conspiracy theories, were to turn this into the entire world into socialism anyway. So that's the way they're headed right now. But I think this is the bigger problems now. The pensions are in trouble. Okay, now this is not me. This is not me making something up, trying to scare you, because I'm not trying to scare you. The markets might go to record highs still. But if you look at California, first of all, CalPERS, can you imagine? And they're already in trouble. They're already becoming sanctuary areas. They already want to support more and more illegals. Okay, and they don't have any money anyways. What difference does it make? But these pensions are paying out dramatic numbers based on what they have and based on what they have to pay out. Most of them now, CalPERS, Central States Trucking, for every dollar they take in, they're paying out over $3 to $4. Now, that can only last for so long, especially that now a lot of those jobs are gone. So there's no more young saps in there to pay money into those pensions to keep them floating. This shows the misuse of money throughout. That goes to Illinois as well. Illinois' teacher's pension is a disaster. Okay, there's going to be a lot of people that are going to be extremely upset by the time they're ready to retire because of the pension systems that they have. All right, because they're not going to be able to honor all of the money that's owed. It's just a fact. Because again, in Illinois, and I can't speak for other places, but in Illinois, they haven't funded the teacher's pension since 1999, which is not a good sign. Okay, and these are things that you have to just kind of understand as the markets go on. So this is going to create a problem, and that doesn't talk about those of us who are going to need Social Security. I'm glad. Listen, I'll be 62 in 2 years. I'm retiring for as far as pension's concerned in 2 years. I'm getting whatever I can get because it ain't going to be there. All right. And it's just sad that we let them destroy this, but it goes back to the same theory that you cannot continue to not make changes that need to be changed. You cannot not adjust to what's going on in the world. And what's going on in the world is we're living longer. So they need to make these adjustments. Otherwise, you're not going to get paid. Now, no price is too low for a bear and no price is too high for a bull. And this is, again, I can't say for 100% certainty that markets are overvalued here because the bulls are still buying. So Can I say without thought that the markets are too high? No, I think they're too high. I'm certainly bearish the market. In the short term, obviously, if you know me, I'm always bullish long term. I mean, I don't sell stock in my IRAs. Okay, I hedge them, but I don't sell anything. Okay, I have a few go broke, but I never sell. But at the end of the day, I'm not getting out of the market. I think the market, like I said, the market's the only place to be. But in the short period of time here, you have people pouring in, paying, in my opinion, ridiculous valuations. And I gave you those reasons because the money is so cheap, the way they're creating their earnings, and even at the way they're creating them, their debt to PE is still, their PE ratios, the price to earnings are still high. All right. And again, those will change dramatically with anything else. So Thursday, we had a market sell-off, and it was a little bit different than other sell-offs I've seen. And I was watching it, and I said, you know what? I better send out a note, okay? Because I know people, and not you people, but I know people in general. In fact, you know what I mean? I know natural reaction is people get nervous, and they get ready to puke, all right? And I just said, look, don't panic and don't puke here. This market, it looked a lot like 1987. Now, why did I say that? Because I could see it in the chart. And I could see the way the price action was working. And I happen to remember 1987 as if it were just yesterday. And the bigger collapse, although the markets peaked in August of that year, the bigger collapse came obviously October 19th, but it started on Thursday, the 15th, with a very similar market that we just saw on this Thursday. And I didn't want to alarm you. Again, I don't preach fear. I don't panic anybody. I'm not looking for things to change you. I'm just saying, hey, this is what I see, and I just want you to be aware. And my first thing is don't do anything without thinking about it first. Be logical in your approach to the market, and don't just give it away. Just think about it. All I ever ask anybody is to sit back, relax, take a deep breath, and then if you still want to do the same thing, no problem. But you need to do it without that panic and fear in your heart. Okay? And that's something that I encourage you always to do is if you see either a big up move, before you jump in, sit back, take a deep breath, and look at it. If you see a big down move, before you puke out, just do yourself a favor. Understand that 99% of the time, either the market will sell off from a big rally a little bit and give you another opportunity, or rally back from a big sell-off and give you a better opportunity. If you're one of the ones that force it, you're one of the ones that are scratching your head at the end, and how did I lose all my money again? Okay, so just remember that. Now, this is 1987. This is actually the crash. Now, look at the pattern. Now, this is obviously a long-term pattern, but look at the pattern. But this Thursday in here, okay, this was the action. It was the markets were rallying. They were trying to run. They were trying to run, and then all of a sudden they just turned over and they got popped. All right. Friday was an expiration. And the markets rallied early and looked like they were going to get it all back, and it was all over. And all of a sudden, they sold off again, and then up. They rallied one more time, and then up. And then by the time Friday's over, they were down pretty good. And then Monday, obviously, you all know what happened Monday. Now, what happened in the crash can never happen again because there's too many circuit breakers and protections in the markets that won't allow that to happen again. The more fluidity of overnight trading. There's too many reasons why, but the first one is there's too many circuit breakers. So if the market goes down like that, they're going to stop it. And the reason they're stopping it is what I'm explaining to you ahead of time. So you should be ahead of the circuit breakers. The reason they stop the trading is so that you can get a calm thought. And what they're waiting for is they're allowing new money to reevaluate the markets and come in to try to boost them up. And that's exactly what I'm talking about. That's why you have to use the psychology part of it to keep yourself under control when these things happen. Now, there's that chart. Here's Thursday. All right, now here's what I'm looking at. This is the Wednesday afternoon. Here's Thursday. We're going along, and all of a sudden, boom. All right, so, and I go, okay. And, of course, then we came back. Now, I think that it's fine. And again, I don't want you to be afraid. I want everybody to be fully mentally alert and clear about what the markets are going to do. I don't want anybody to ever use your overall opinion, because your opinion, like mine, stink. When it comes to prognosticating the stock market, okay, it's virtually impossibility. There are ways to try to put the odds in your favor. There's a ways to put yourself in a probability model. Now that we can always do, which we will continue to do. But what does it all mean? All right, what does everything I just talked about for a half hour mean? Nothing. Okay, it was an exercise. I want to exercise my vocals. Right? I mean, those are all things you hear every day. All right, but in the meantime, you hear the pundits. They're going up. They keep cheerleading, and that is my problem more than anything else. Okay, we all know the facts, right? You know, you can spin them however you want, but we aren't strong right now. Okay, there's a lot of manipulation going on. If you don't know what manipulation is, just ask OPEC. Okay, who tried to prop up the price of oil in November when it was 55, and now it's 40, because of course manipulation doesn't work. Ask the Fed, who tried to not raise rates, and the fixed income traders forced them to raise rates the first time. So manipulation never works. Over time, it has to fail. So what we just talked about means nothing. All right, it's something that you can know, you can understand, and if you find a good spot to execute something based on that information, great. But don't just freely go in and sell something or buy something because of the news. The news is worthless. Okay, it's less than zero, is what it means, unless you can get it way first. So I'm a big guy. I just want you to learn how to identify the markets. That's all. Again, is there a guarantee that you're going to be right? No. But can you raise the probability? Yes. And that's the whole key, is to learn how to raise the probability of the market in your favor. And that's what we talk about. That's how we tie all this information together now. Because knowledge is power, and it's all in the charts. All right. Everything we do is all based on, look, do I have an opinion? Of course I have an opinion. I hate the market right now. You know, when I was on the floor, we would say, let's sell it with both hands. But when it comes down to a big trade, my trade's got to come from the market, from the charts. I've said this many times, and some of you may or may not have heard it, but I would say that I've made some unbelievable calls, but if I could have back all of it, I guarantee you, if I just minded to my knitting and just did what I was supposed to do, okay, I'd have made more money than trying to be a hero and make these monster predictions. And if you ever hear me on air, you know, they'll ask me, I go, look, I think the market should go down here in the near term, but again, I can't predict overall. You know, they always want a number. Where's it going? Well, I mean, in my mind, I think we're going back to 1562 in the S&P. That's about 30%, 40%. Okay. Are we going there tomorrow? No, we're not going there anytime soon. I don't expect this to be a debacle, but of course, as bad as 08 was, it wasn't really a debacle. If you had had all this knowledge that I just imparted some of it to you in 08, you wouldn't have made the same mistakes. In other words, you wouldn't have panicked at the bottoms. You would have been looking to be a buyer, or at least hold on to what you had. You wouldn't have bought into those big recovery rallies, which is the key. When you see them, these sharp spike rallies are not buyers. They're opportunities for you to sell. Right? And that's when you see the rotation of the market. Now, what I've said a lot recently is follow the VIX, right? Because this is a very big indicator. Now, I'm going to give you a specific example. On Thursday, right, the VIX had spiked at about 1 o'clock Eastern time. The markets were still going down. All of a sudden, the VIX said, okay, that's enough for me. I'm done. And I'm going to start going down. And sure enough, the VIX started to go down, go down, go down. The markets were still going down. And all of a sudden, somebody said, oh, wait a second, maybe we should start to be a buyer. And of course, that's where the rally kicked in. And this is where, again, is it automatic? Absolute? No. But these are parts of the market footprint that show you what might happen next. Right? They give you a much better clue. This goes back to, listen, in 09, you should have been a buyer in March. You should have never sold anything in March of 09. Okay? Now, I'm not saying you should have bought the bottom, but the VIX, believe it or not, the VIX bottomed in November of 08. So once that occurrence happened, it was only a matter of time before the market was going to rally. As it continued to plummet, there was time to take opportunities. Now, again, they didn't all work, and eventually you would have found the bottom. But my point is very simple, that the markets kind of work in tone together. And if you understand what to look for and understand the thing you're watching, and you tie that with a solid market footprint, it gives you much better opportunity. So if I look here, I see the VIX starting to trend lower. Okay. So in the short term, all of a sudden, I see the VIX is heading lower. The Dow finds a bottom. So to me, that's probably a pretty good buying opportunity. And I'm not talking about for long term. I'm talking about just for the moment on this particular chart. And sure enough, it turned out to be that. Now, did it have to be? No, but it was a higher probability than me just saying, oh, it's time to buy. Okay. Oh, I didn't want to do that yet. But anyways, happy 4th of July, and I'm proud to be an American. I love you all, but I'm not done yet. This is just, I want to go switch to here for a minute. So, all right. So when we look at the markets, all right, and when you're looking at any chart, well, here's the Dow. Right, this is the Dow future, but I like it because it's 24 hours and it's cleaner. All right. But if I look at this, so we did finally make a high, right? So, okay, great. And I'm not saying we're not going to take it out again. Again, we could do anything. I cannot predict. I can only assume from what I see. But what I do see, and one of the keys you want to look for, is a market that's starting to make lower highs. That's the first indication that this rally potentially might be over. Okay, now it's not as clear in the Dow because we're still pretty much in a consolidation range. All right, so we did bounce about where we should have. And the next stop here, if I'm gonna be right, should be probably around 21,000 or so, maybe a little bit lower, but somewhere in that area, and we'll probably get another bounce. Right now, I would be a seller up against the top of the market because of this impending downtrend and because the days are getting bigger. The volatility with price is picking up, even if not with so much with volatility. Okay. Now, if you look at the NASDAQ, though, a little bit different story. The NASDAQ is more dramatic. The NASDAQ had the big drop, which was on a Friday, tried to rally back up, came right back to where it should have, which was a resistance area, and is plummeting again, is now breaking down below. Now, again, we'll see how it goes here. My expectation is it might sell a little bit, and this would become a sell spot. I would not be a seller today into this. All right, I'd let it either rally a little bit or wait till it broke hard and then came back. But again, this is much more pronounced as working its way lower. This is what they would call a descending triangle, and I would tell you that if it breaks below, now it doesn't have to. We certainly go back to no highs. Again, I'm not ruling out that. In fact, I've said in my writings and everything else that I'm short, and I'm not getting out unless we make new highs. If we make new highs, then I'll be out and I'll move on. Okay, but if until then, I'm not doing anything. And of course, I'm just going to give you an outside market to look at, because here is a market that I thought was so overvalued. All right, and I was really short right here. Okay, and it just wouldn't break. Right. And then I just finally threw in the towel here. I said, okay, if they take out new highs, I'm getting out. And of course, it did. It went straight up. They happen to be hogs, by the way. But the point is that you can't argue with the overall market. You can take a chance here and there. You can maybe step out of the box a little bit here and there. But overall, you cannot predict exactly what's going to happen. You have to wait for opportunities. Now, this was more of an opinion based on where we were in the markets and based on some other formations when I did this. So this had more calculation to than just me. I wanted to be shorted, but it didn't work out. Now, if you look at other markets, okay, if you look at the gold market, right, we're right here. This is decision-making time for gold. Now, I'd be concerned, and I'm long my own gold, but I'm also long gold. I'd be concerned because I don't like this. Here's that same pair I'm just talking about. So it applies to every chart. So now, if they break there, I have to get out. All right, because again, this is the other side of the equation. This does not look very good. Now, it could hold here, and it should hold here, but it may not. So when you look at markets, you have to look at them objectively without an opinion, without being predetermined. Now, we said, and this is exactly what I'm talking about. I said that crude oil was a buy, all right? And I said that you want to buy it until it goes up to about 46 to 48. Well, here we are. Is it a sale here? Well, I don't know. I mean, I would consider selling it here, but I'm not going to sell it until it starts to change this time. Now, again, there's a lot of reasons I believe this could be it, but until I start seeing a reason, as long as it's going up, there's no reason to sell it. Okay. Look, at the end of the day, if it keeps going up, it gives me a reason higher to sell. I'll sell it higher. So I want to be short crude, but I'm not going to sell it now just because I want to be short. Doesn't make sense, does it? There's a whole bunch of questions. Let me catch some of these up. Good calls on the gamble trades, John. Yeah, I'm really good on the gamble trades. The problem is that the real problem with the gamble trades for most people is that I am outstanding on those. But they're costly sometimes because, if you're paying commission, look, I can do 100 and make a dime and make $1,000, right? But nobody else can do that because the commissions are too high. So it's always, I'm always very careful about the ones I want to give out. I bought some, I'll be honest, I bought some NASDAQ puts yesterday, right? At 12 cents at 345. Okay. And I sold them at 55. But my point is, not everybody can do that. That's more of a higher gamble trade. And I don't want to, that's not what I'm trying to teach, but those are certain things you can see. If we think the VIX is going higher, what are your thoughts on buying a speculative out of the money put in the longer term VXX? First of all, the VXX is a crooked index. You'll never make money buying a long term put there because the problem with the VXX is it decays by itself. It's like a giant option. Okay. The only way to play that is to sell premium there. And if you're willing to take the gamble to buy calls, I would just sell puts naked. All right. Now I don't usually sell naked puts, but in that index, I'd be willing to sell them naked. They're a little bit inflated in premium anyways, and you can just sell them every week until you get somewhere, and then you can kind of figure out. Then if you get closer, this product, you need to make a move right away. You cannot wait for this product. This product has to move immediately. All right. But you could sell, like let's say the 1250 puts. I know 20 cents isn't that much, but again, if it goes higher, these are going to zero. And again, that's the only way to play this from a long standpoint. And what you do is when you can identify a good footprint, which we do not have. Okay. This is not a good footprint. Now it might be starting to see a good footprint here. But until it develops a good footprint, this is the case. So it's nothing more than a big option. So I hate it. VIX is melting like an ice cube. Yeah. What about wheat? Too late to buy? Yeah, it's time to sell. Here, this is a good question because it doesn't matter because all markets are the same. Here, I told you to buy it here. Did I not? Huh? Come on. We bought it here, right here. Here. This is too much because look, we're double blow off. Am I going to jump into this? Believe me, I'd like to sell it, and I probably will on Monday or Wednesday. All right. If we think I got that one, good point on circuit breakers. Thank you. You cannot pay out 8% of assets, 23% return. Right. That's a market crash. There you go. Good job. No more Powerball. Yeah, no more Powerball in Illinois because they can't pay. Good call on wheat, one of many. Thank you. No more Powerball. They're broke. CalPERS, fund managers, pleaded ignorance. Well, they're pleading ignorance because they don't know what the hell they're doing. Again, this is, more of one of the problems I find with investors today, okay, and not just today, but in history, is we've always done it that way. This is the story I always hear, all right? We've always done it that way, so why should I change? Why should I hedge? We've always done it that way. I didn't ever hedged, okay? I mean, look, I have one of my best friends. I had to beg to try to hedge his portfolio because I just wanted him to see it, right? And he finally did it. And of course, what do you think happened? The market went straight up and he yelled at me. And I said, hey, you know what? I said, you don't want it? I'll pay the losses. Okay. Because I know that it's going to be right. And I've watched it and I've got the numbers and he believes me. And so he re-upped in the more. But again, it's just one of the things that happened. Okay. I will, Dan, before I go, promise. Do I know if Barney Frank is a bank director? I do not know. Not surprising, no. A house is not an investment. Well, it used to be somewhat of an investment. I mean, it wasn't an investment you were gonna return, but it was a hell of a lot better than paying rent. And you were kind of like forced putting money away, even though the house is a money pit, as we all know. Same thing in Georgia. Oh my God, Green says nuts. Green says probably a term, dementia. Okay, all right. So I got all these. All right, good. So at the end of the day, all right, we've got a market footprint. Now, depending on the time frame, we trade futures on a short time frame. So the footprint is different because you're only concerned about the time that you're looking at and the market that you're looking at. So if I'm looking at, I'm looking at a 3-month chart on the Dow, right? Well, so right where I'm at, I can't be a seller here. I don't like the market. I think it's going to go down, but I need to see either a little bit of a rally, in which I then would consider being a seller, or I want to see it break down here and I will sell it when it comes back on a rally, because the market will rally back. Again, the key, what we want to see is lower highs and lower lows. That is the more key to anything, because if you pick it right, and I've said this I think 1,000 times, if you pick the top at the right time yourself, you'll miss most of the move, because the first rally back you'll be saying, oh man, I was so smart, I'm taking my money off and the markets are going up and I'm going to get long, and of course then they're going to collapse. Okay. Why should gold go up? Well, it doesn't. There's no should in it. I mean, I think it's at a key spot in the chart pattern. From a technical spot, I think we're at a key spot here. Now, it doesn't look great, as I said very clearly. It does not look great. I mean, I wouldn't. I'm not like. I'm not thrilled that I'm long gold here, but I am, and I just have to make a decision. And my out point is if it breaks down from here. But it is a hard asset. So if you're looking at it as an investment standpoint, if you're looking at it from an investment standpoint, you can buy gold anytime in a small percentage, because you can buy it more higher or lower. It doesn't matter. If you're looking at a trading standpoint, you can't be a seller here. You could only be a buyer here, or wait until it breaks and then rallies back to sell it. So I'm a buyer here, and that's why. It's, again, there's no for sure. ZZ, top of the channel breakout, or breakout. Oh, that's Corn Boy. What are you doing there, Corn, young man? They don't have corn in California. I actually track this every week, so you can be along with my. I think it's right at resistance. I do like corn. I do think it's going a lot higher. Okay, but I think that we're coming up to the top of a channel. I did say that we should be a buyer down here, which I have in writing, by the way, so I'm not just making it up now. No, and I think it's going up to here. All right, and I think if you just look at this is what these are obviously a little bit different. They have a little bit more effects to things, but at the end of the day, they still trade off the chart. And so I think it's, I wouldn't be a buyer here. I said, in fact, I wrote this morning, I would be exiting if it doesn't break through 385, and if it doesn't get through 380, I'm selling at 380. I'm going to look to rebuild. I'll look for a dip to come back and buy again. Crappy markets of the summer, low volume. They've been crappy for a long time, so it's very hard to say that. All right, you should be getting my ag stuff, big boy. Of course, I don't know. I can't give you the family discount again, though. Let's see, silver. Okay, FCX. Somebody wanted me to look at it. I'd be happy to do that. FCX. I mean, right now it looks like it's going back to resistance. I mean, to me, I would never be a buy. I mean, if I was going to buy it from my IRA account, yeah, I would buy it here. I'm not going to really be that concerned. Okay, I mean, it's a $12 stock, but if I'm trading it here, I'm certainly not a buyer here. This is a hard stock to trade. We traded it once, and we did okay with it, but it's not a great stock to trade. It doesn't have those kind of big movements, so it's really hard to do some of these stocks. You got to have a real inkling that they're going to really pop. But this is not one I want to be in from an investing standpoint, and I don't see it going much higher. And I don't mean to get me wrong; it could go to $15. It used to be a $60 stock, so it's only going to go up. I just, from a pure chart standpoint, I don't see it. In fact, the last 2 days' action even give me more cause to believe that it's coming back down again. No cardiac arrest. Silver. It's not messy. It's as clean as can be. It looks pretty weak. It looks kind of like gold. A little bit better than gold, but kind of like it. All right. I mean, I don't know. I think silver's going up, but again, it doesn't make me right. It just, that's what I see here. It's down. We're down here towards the bottom. You could have heard me on Kitco talk about that. It broke a little farther than I thought it would, but again, it did hold my key level. I think it'll work its way higher. And a lot of that has to do with the manipulation of the dollar and the currency. And that is one of the concerns you should have today is if you like these products, they should be higher based on what's happened with the dollar, because the dollar has gotten absolutely thrashed and nobody cares. Nobody talks about it, but here you go. Now, of course, the Fed loves this, as does the government, because it makes their buying power more, and it makes exports come in, imports. People want to export out of the United States because of the cheaper dollar. This is about the end. You'll see, I think, that the euro currency is going to collapse here now. This is what we were waiting for, 114. Well, we got to 115, but I think that you can start to almost sell as it will. I mean, I just got to be able to handle the pressure if you're not right away. FXC. Oh yeah, well the dollar, the Canadian, the loonie is going bananas here. The loonie. Okay, that's because the dollar is so cheap. I mean, it's benchmarked against the dollar. There you go. Look at this chart. Take a look at the U.S. dollar. That's the Canadian dollar. They call it the loonie, or they call it Bubba, which either one. They're both loonie. Okay. All right. So, again, a lot of reasons to believe a lot of things, but again, do not allow your opinion, the news, or anything else to get in the middle of all of the stuff that you're seeing. You should be able to determine if there's activity right here. In any chart, you should be able to look at the chart and grab an idea as to what's going to happen. Now, again, I am not always right. I would never claim to being always right, but I have a pretty good feel and a pretty good understanding of how the charts work. And I will tell you that, I said buy this one around here. Okay. And again, I'm not bragging. I'm saying you look for certain things in the market, and the first thing you need to see is if you want to get short and it's going up, you got to wait till it stops going up before you can sell it. If you want to buy something and it's going down, you got to kind of wait till it stops going down. Now, you don't know exactly that you're 100% right. Here's a perfect example. This is what I talk about all the time. So I'm gonna show you how I can be wrong. All right. So here I kept looking at this, and I've watched this for quite a while. And I said, might be a possible buy here, and it wasn't. I said it might be a possible buy here, and I said, I'm sorry, I was here, and I said, finally, I said, you know what? Screw this stock. I think they're going out of business. No chance. I'm not buying anymore. I'm done. Okay, look what happened. You got a good news? Boom, there you go. So again, but you can. Your job is to put the probabilities in your opinion, in your favor. That's your job. Okay, you're not going to always be right. Okay, I mean, Lowe's looks pretty good. I mean, this could either be a flag. Okay, that means this is going down, or it could be coming down to support. Now, I would assume at first to be based on where we are right now in general. I mean, I wouldn't buy it at 77. I mean, I might look at it at 75, 76. Again, I wouldn't buy it here. I'd have to buy it on a pullback. You're never going to catch me buying them on their way up unless they pull back, or selling them on their way down unless they've rallied back. Okay. So remember, all the news is crap when it comes to trading, which it is. Okay. All the news should play out in the charts. And believe me, as I've written before, money has no conscience, and neither do the charts. They'll tell you what's going on. You need the discipline to make the decisions, the money management to weather the storms, and the patience to put it all together. If you can't do this, then you can't make money. Okay. If you're gonna sweat and swim over every single trade or every series of trades or any short period of time, if you've done your homework and you've done your money management and you've taken care of everything, then you have to be able to weather the storms that happen in this market. There is no way that you can get away from things that happen. I mean, things run in streaks. Your objective is to put the odds in your favor on every trade so that over the law of large numbers, you will benefit from that. Okay. And that is the economy and the stock market, according to Bubba, QQQ, diagonal put rolled down. So extra great. So everybody have a happy 4th. And for you Canadians, I think today's, was it Canada Day? Is that what today is? It's something. I know it's something. 150 years, I know, but whatever. Anyways, everybody have a great holiday weekend. There will be no other calls until Wednesday when we do futures and hedging. But I appreciate all of you spending time with me today. And obviously, if you ever have any questions, you can always feel free to email me. And in the meantime, everybody have a great, safe holiday weekend. And to the veterans and their families out there, I salute you. I'm standing for you. I thank you. And thanks for giving me the freedom to do what I do. We can never appreciate you more, and that's why I'm proud to be an American. Happy 4th, everybody. Thank you so much.